And there we go. The markets are officially closed on this Wednesday, July 15th. Welcome, investors and traders. I'm AJ Monte with StickyTrades. And put on your seatbelt because we have a good packed half hour for you. You might want to take some notes on this one because today we're going to be showing you some of our most successful trades where we've been trading credit spreads, both on calls and puts. And so far, we've got a 100% track record with our success. So we'll show you the actual trades that we've been doing. We'll show you the strategy. And with that, I'd like to first go over some of the charts with you before we bring on Nod from the Nod Live news feed. Now, taking a look at this chart right here, we've got the Dow. This is the Dow Jones Industrial Average ETF. And I still have my upside target set on DIA at 529.36. And today we had a slightly higher high, but we have a higher low. So I think there is a chance that tomorrow we could hit that upside target. And then I think the tide is going to change. I don't know if you're seeing some of the headlines from Not Live or maybe even Bloomberg, but the strikes in Iran are intensifying. That's going to put some pressure, upside pressure that is, into the oil market. And it wasn't like we didn't warn the market, right? Nod and I were talking about crude back when it was filling the gap back here in late June. And we told our audience that I would not be surprised at all to see crude oil in the low to mid 80s. And there we go. Today we're trading $80.35. So that's going to put some inflationary pressure into our economy. And while the CPI numbers were looking fairly tame, Nod and I are going to outline what the CPI is not picking up so that you can get a big picture on what's happening with the economy and why that really threatens the market and could eventually lead us into another great financial disaster or crisis. And I do believe that's a real threat. So going back to the markets here, DIA, like I said, still have the upside target there. IWM, I have an upside target as well. We have a higher low, higher high today. My upside target on IWM is right around 301. Now on the Qs, I had a downside target that hit perfectly. So the downside target is hit. We might see a little bit of a lift in tech tomorrow, but I'm not as bullish short term on tech as I am with the industrials and the small caps. So stay tuned for my weekly market report that will go out mid-afternoon tomorrow with some more target prices for you. And then SPY, I have a downside target that I am keeping. This is known as a hanging man candle right there. If you're not familiar with candle charts, a hanging man is a small body, like that rectangle up there. Doesn't matter what color it is. A small body with a long shadow underneath, and sometimes you have a little shadow on top. There you go. That's a perfect textbook hanging man, which is bearish. And so with the markets closing now at that resistance point, I think we're going to see some downside pressure in SPY, which is going to give a lift to the VIX. Right now, the VIX is on a key support level. I think we're going to start seeing that turn higher. Our option traders would not mind that at all because a higher VIX means more option premium that we get to sell. And the more premium we could sell, the quicker we get to pay down the cost basis of the long positions that we hold. And stay tuned as we show you those actual trades. Before we bring on Nod, how about you ex-viewers there who are on that platform? You might want to join us over here on YouTube and subscribe to our channel because we've got a chat room that is very active right now. In fact, I like doing this. Let us know where you're tuning in from. Type in the state, the country, wherever you are in the world. We love hearing from you and identifying with our audience. So, like I said, let me bring on Nod from our Nod Live news feed. Nod, you had some headlines go out today. Why don't you cover some of that? And by the way, for those folks that are interested in that news feed, there's the scan code right to the bottom right of Nod's profile picture right there. And so if you want to scan that, you get a free trial. And I'm telling you, you're going to get news. All right. You're going to get news and more. And you're going to absolutely love it because it's very relevant to the markets and especially helping out our traders with, breaking news, especially. So now what do you have to share with our audience today? Go right
Thank
ahead.
you, AJ. Lots going on. United Airlines just posted their earnings, but listen, the S&P rose today with major technology behind the gains as traders digested more data showing inflation is cooling. Chip makers like Micron, Lam Research, Intel, and AMD were all under pressure, though, even after that PPI report. June PPI did show that inflation fell to 5.5%, which was below the 6.2 expectation. Core PPI fell to 4.7, below 5.2, but the month-over-month AJ PPI inflation fell 0.3%, the biggest decline since April of 2025, which I believe was behind the gains today. MBA mortgage applications, those happen every Wednesday. They fell 2.7%. As our friend Tim Lindsay will tell us, the rates are stubborn. 30-year money is still stuck at 6.65%, and it's just not getting people enthused. Apple is supposedly on hunt to acquire an AI chip-making company. On the back of that news, shares of SanDisk and Dell fell sharply lower. Semis, AJ, have technically entered a correction on the verge of a bear market as they've fallen 16% from that June high. No one's really talking about that yet, but I think they will soon. Today, BlackRock became the first investment firm to manage $15 trillion. So crossing that market is just tremendous. But they were also involved in SpaceX, AJ, and those shares traded below their IPO price of $135 for the first time intraday. And I know you have a lot to discuss, AJ. I threw a lot up in the air, but man, people have to have their head on a swivel and they have to stay informed. There's a lot going on.
Well, let me dissect that a little bit. First, you mentioned United Airlines. Anthony, if you could, go to my minute-by-minute chart so our audience could see how they're absolutely punishing that airline right now. It's down 5% from the close just a mere 7 minutes ago, down 5% on that earnings. And I think that could put a lot of pressure, especially with the Strait of Hormuz being shut down. That's going to put upside pressure on oil, which obviously increases their biggest expense cost, which is fuel. And so that is going to be on our watch list. And you also mentioned the semis. If you look at SMH,
Right,
which is the semiconductor ETF, Nod and I were talking about this in the warm-up, and I want to show you exactly what we're seeing here. For those who are interested in price patterns, this is known as a head and shoulder top. You have a shoulder here, a higher point for the head, and then you have a lower shoulder. Now, the big key in a head and shoulders pattern is you got to look at the volume between the head and the right shoulder. If the volume is dropping, that confirms that the pattern is in fact a topping pattern. And then when you take the neckline from the troughs here, there you go. Last week, we broke out below that neckline, and right there, it failed to get back up on trend. We define that as the KOD. A lot of our members know exactly what that means. That's known as the kiss of death. It has an extremely hard time getting back over that resistance. So, like I said, semis are going to be under pressure, and we're ready for it because we have put spreads on. We're doing tremendously well, especially with right now SpaceX. I'm going to throw this chart up there. Oh my goodness. You folks who have been watching us for a while, even before SpaceX came out, we talked about the pump and dump trap that was being set, and the hype was running absolutely off the charts, over the top. And we even highlighted that very unfortunate story about the gentleman who did a very stupid thing. I'm not going to mention his name, but he took his life savings right there on that high, took his life savings and bought calls, and then went on to social media to explain to everyone that he lost his life savings. And that's the worst possible thing he could do. And we even caution our members about buying out of the money calls, especially in the front month that have virtually no time left till expiration. So now, as we're looking at this chart of SpaceX, every single person who bought it on the IPO date or after, everyone is now losing money. But guess what? Our members are not losing money on this because we have a beautiful diagonal calendar put spread. with some credit put spreads added to that and what's called the butterfly. We'll get to that in a moment, so stand by for that. And it's just a great trading market. Now, going back to what you said about debt, in the great financial crisis of 2008, we saw the markets drop 50% in
Right.
a mere 12 months. It was
Right.
absolute disaster. But the big threat now is that the markets are more leveraged now in derivatives than any other time in history. So one small move to tip over the first domino could start the chain of dominoes going down. And I think the biggest threat is going to be to the pension plans. Now, on the not live feed that you have, talk a little bit about how severe the debt crisis is for the consumer and where that could lead pension plans if this thing starts to go upside down. Go right ahead.
Sure. I think, people like to say it's different this time. I think the only difference is the amount of levered products that we have now versus 2008. So you can spend $1 now and get a levered instrument that gives you that massive exposure to the upside. But when it goes down, it does the same thing to the downside. So right now, AJ, U.S. margin debt is at a record high of $1.42 trillion as of last week from FINRA. That's a 9% increase from month over month and a 54% jump from this time last year. On top of that, AJ, you've got total credit card debt at $1.25 trillion. That averages about $6,600 per adult, and delinquencies are at a 15-year high. And then we get into cars, AJ, which again is kind of fudged within the CPI and PPI numbers. Auto loan debt is at $1.69 trillion, which is the second largest form of debt behind mortgages. So roughly 86 million Americans, or 1 in 4 adults, carry auto debt and a payment of almost $740 a month. So
let's
all those numbers, it's brutal.
Yeah, let's stick on that for a second. Let's look at the real life scenario just with auto loans. Okay,
Yeah.
a lot of folks who are already having to stretch their dollars go out and they look at the new car market and they go, oh, I can't afford an F-150 for $80,000 to $90,000. I can't do that. So I'm going to go into the used car market. So they do that and they still finance the debt, but at a much, much higher interest rate. So
on a depreciating asset.
Exactly. So after 3 years of paying that at the higher interest rates, they're already upside down in the vehicle. So when financial pressures start to really weigh heavily on their shoulders, a lot of these folks are just going to let the cars get repossessed because there's no value in it to them. If they let it go, it might mess up their credit rating, but they don't care. That's just the hard fact right there. Now, combine that expense with mortgage rates, and now you've got people where, again, we go back to the CPI where it looked fairly tame this last announcement or release of the data, but the CPI is not measuring the drop in consumable spending because people are having less money now to spend in the economy. It doesn't matter if prices get cheaper. They just don't have the dollars to go out and buy whatever they want to go buy.
Right.
So now I have a chart here of QQQ back at the end of 2007 and into 2008. Now, we called this one back here at the high. I started calling the market top. And 2008, this is what I'm talking about. We dropped 50% in 12 months, 50%. Now, it doesn't look like much when you compare that to the big picture, right? Because here we have the big picture. What did I just get finished showing you was the financial crash back here, down 50% in 12 months. Now, prior to that, you have to understand that the tech bubble also dropped 50%, but that took 3 years to do that. Then we had 2021, which we called that top. One of our VIPs, Gino, could tell you about that precisely, how great that drop was for him and a lot of our members. But you're looking at this monthly chart, Nod. Look at the divergence that we have just from the 20-month moving average.
Right.
It's the greatest divergence in the history of this market.
Ever.
And we've got lower highs showing up at the top with the oscillators. For those of you that don't have the CCI on your chart, you're missing out on the best indicator. is about to show a sell signal on the CCI. Now, this is the monthly chart. Going into the daily chart, you could see that we're forming a triangle here. So I think we're getting very, very close to a possible breakout of that triangle. Now, that's not a rising triangle or ascending triangle. That's a symmetrical triangle. So if the Qs drop out of that triangle, you could see the Qs all the way down here at right around 660 or so. And so our option traders, our VIPs especially, have negative delta stacking up, which they have diagonal candle put spreads in place to protect themselves. And by the way, if what I'm telling you here is completely foreign with regard to put spreads, call spreads, diagonals, verticals, whatever, come on over to StickyTrades. I think we could throw a scan code up there for our 15-day trial. Do we have one of those? There we go. Look right there. Where is it? That way. See under nod on the right-hand side there. You scan that with your camera on your phone, and you can come right on over. And by the way, if you get that 15-day trial, I encourage you to go through a deep dive and get as much content as you possibly can in that 15 days, which also allows you to come into our recorded webinars and live webinars. So you have Nod and I both to submit questions and learn this. I mentioned Bobby Barnhill from Chiefland. He owns a nursery and landscape company out there in Chiefland, and he's learning how to do the wheel, which we highlighted last week in SLV. Now, I'm going to use that as a segue now because SLV is looking pretty good at these levels. And the reason I say that is because if you look at the US dollar, and I want to work this in because look how fast 16 minutes is already gone, and we still got full of 14 minutes to get a lot of content. But look at the dollar. The dollar is now closing below the 20-period moving average. So a bearish dollar, and I think the dollar could drop all the way down here. A bearish dollar is bullish for the metals companies and the mining companies. So we're doing the wheel where we're selling puts and doing covered calls on SLV. You can follow me on X for my exact trades. I post all my trades on X, and you can follow along. Now, Nod, I do believe we might have some questions or ticket sums, but there's a big announcement we got to make because we have a swag winner coming up right here on MRCY. There we go. MRCY was our swag winner, and Robert wins a swag prize. And here's what we have. We had a downside target back here of 98.16. And on Monday, it hits that perfectly. And what happens? Well, it's not unusual for us to see targets hit and then the price starts to reverse after the targets hit. That's a very common occurrence because when I set targets, I usually set them at support levels, which this was from back here, or I set the targets at resistance levels. So that's why when targets hit, a lot of times the price will be bouncing or pulling back from resistance, depending on whether it's support or resistance. So, Robert, congratulations. We're not going to mention your last name, but if you could get an address to us and you pick the swag from the store, we're going to send that on over to you. So, Nod, let's see. We got any more ticker symbols from the audience here in this very active chat?
Maybe we do. I mean, Eric Johnson's really curious. He said, how is MRVL looking after this big retracement that it's had?
MRVL. All right. Now, this one, I wouldn't be touching it, by the way. Not yet.
Well,
and here's
one.
Well, because look, we have a Delta 7 checklist that we use. And what that does is it measures price and volume as the top two signals. And then that's followed by the oscillators and divergences and gaps and such. But see this big red candle today? That stock is down pretty significantly there. And the volume, although it's hard to see, the volume is increasing on the way down. Okay, so if we look at that, you've got a lot of red here. But I would go, I'll do a two-parter here. Let me see if I can get that to work here. I'll do a two-parter, and then Nod, remind me, I want to talk about Home Depot because hurricane season is running full speed ahead.
Thanks for the reminder.
So I think because of the high volume, I think we're going to go a little bit lower because there's a support level down here that might very well hold. But here's my forecast. It's not on the downside. If we get a drop in volume, Eric, then I think we're going to see a bounce. And I don't think it's going to be a significant bounce because this is a downside channel that we're in here. See this? I may have even gone too far to the upside, but I think that you're going to see an upside target eventually on this one right there. I'll announce this for the audience here. That upside, I got to go to 224. Get rid of those pennies. So I think downside first, drop in volume, and then to 224. And if you do get that target hit, we'll be calling you up as well for some swag prize there as well. Now, for the brand new folks who are looking at this and go, how the heck can you do two parts? Well, our option traders rely on looking for support and resistance areas and pivot points. So if we get that bounce, that's going to be known as a pivot. When the price starts going up, that's the highest probability for price reversals when you see pivots like that. So in order to trade that one, once it starts pivoting, you would be either selling put spreads, buying calls, or buying call spreads on the way up. And little moves like that will yield big returns, especially in percentages. Let me just point this out. I told everyone I was going to show some of the trades. This is actual trade blotter from 2026 for our ultimate service. Now, let me just go through this very quickly, folks, so you could see what I'm looking at here. Every single one of these trades that we put on through that service has been a winner. Now, these most recent spreads right here, these are on track to be winners, but we won't be able to log those as winners until July 17th, which is this Friday. So this will most likely be a winner. Pepsi is up today. That's most likely going to be a winner. August 7th, that's most likely going to be a winner. And we put one on today where we sold an out-of-the-money call spread for $1.20. Some of the lucky members got in there first at $1.20. And almost immediately that spread went down, which, by the way, when you're short a spread, you want it to go down, and it dropped like a rock as Micron continued to go lower. So I put that one out in the morning, just a little bit after 11 o'clock. And look at Micron here. Look what happened to this one. Big red candle. Remember what I said about that volume? Big volume on the way down. That means lower prices, most likely. So our option traders are short calls up here. We don't want it anywhere above that moving average. And if that's the case, then we get another winner chalked up. Again, if you want to learn how to trade spreads like this, come on over to StickyTrades. We'll teach you how to do it. We have an online university, by the way, where you can learn this at your own pace. And everything's recorded. And the university, once you go through the video course, we even have quizzes along the way to test your knowledge and retention so that you're getting a good, accurate read and knowing how to read these charts and how to put on the spread.
Earn as you learn.
Yeah, exactly. I mean, learn at your own pace. A lot of people are very busy. They don't have time to stare at the markets all day. Well, most of the trades we put on, you could put them on after the market closes for the opening tomorrow and just let it sit until the opening. If you get filled, you get filled. If not, you wait for the next trade publication to come out and you're not missing a beat. So there we go. So let's take another ticker.
Yeah. So speaking of getting filled, IBM had a big day yesterday. So Scott Russell and Mark are asking about IBM, and Mark is saying, do you think with IBM having the big drop is an indication that AI or quantum computing companies are going to head lower? So do you think this is systemic for that space?
Absolutely. In fact, Intel, this came up today in our VIP chat because some people would think about taking a long position in this. I would not do that yet. Absolutely. There we go. Why? Because look at that candle from today. See that candle? There's no line underneath that. What does that mean? It means that IBM closed on the low and it stayed on the low. Look at that. Last minute was a new low on the trading day. It's not bouncing in the after hours. But on this one, I will go higher, but it's going to have to be contingent on another drop in volume here. So I think we'll go just a tad lower. And then I think we're going to go up to yesterday's highs. And that's not asking for much, but there is a massive gap, which has created great damage to IBM and the affiliated companies. So let me put an upside target on this, but it's going to be contingent on a drop in volume and a pivot. So upside target, I got to lower that to 226 to get rid of those pennies. So still talking $15 to the upside. So there would be opportunity in that with a credit put spread. This is not advice, by the way. This is just what I'm looking at. I have it on my watch list. But once you sell a credit put spread that's far out of the money, your goal is that you don't want it to go down below your strike prices. So if it looks like it's pivoting and building support at these low levels, you're in really good shape. So if we hit that upside target, then we're going to send out some more swag. But it has to hit 226. I mentioned Home Depot. I want to show everyone this. This is my favorite trade, or one of my favorite trades, because if I go back 10 years on Home Depot, I'm going to show you. This is a cycle trade that we do almost every year. Now I'm going back 10 years. These vertical blue lines, folks, take good notes on this one because I'm basically showing you how to make money right here. Every year, Home Depot for the last 10 years has rallied every single year at the very beginning of hurricane season right there. See that? June 1st begins hurricane season. It goes into November. If you bought calls here, you would have made money. 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 You would have made a lot of money. Next year after that, you would have made good money because these are not small moves. Remember, this is a weekly chart here, so these are not small moves. You would have made money. You would have made big money again, big money again. We're already making money, and we put this trade on last month. So our option traders already have this spread on, and that's what makes for such an exciting market, Nod, because we're not going too far into the directional realm. We're going spread trading, which are hedge positions. Now that those lines are changed on the daily. Don't mind those on the daily. We were looking those on the 10-year weekly to get the reference on the cycle. But beautiful cycle. Over the last decade, it would have worked 100% of the time. Now, let's do another one. Now, we got enough swag, but let's go talk about some other stocks that people are putting into the chat because we only have 2.5 minutes.
Yeah, so you had mentioned pension funds, AJ. So a move like that in IBM, which is something that they have, is going to hurt them. So we talked about hedging. Dan wants to know what's going on with AG and the precious metals in general. We've seen a move in the dollar. So what kind of correlation and reaction are you looking for in the metals?
Well, I mentioned that earlier because the dollar dropping below the 20-period moving average is bullish for the metals and mining, and that is a beautiful hammer candle right there. So don't hold me to this, but I would put odds that tomorrow we're going to see a green candle on AG. Not only will it be green, but I think we're going to get a close over that 20-period moving average just over there around 17. So that's a great one to be doing. The wheel, if you're unfamiliar with the wheel, go back and listen to last week's recording where we give you some ideas on how the wheel is traded. It's not a complicated strategy, but it will take a little time for you to learn it, right? And that, believe me, the time you put in studying is time well invested. You know, there's no risk in time invested in your education. Absolutely no risk. So I'm very bullish on the metals, but I really don't want SLV to go up big because SLV, I have the $59 calls that I sold in August. So while I would like to see it get back up a little bit over the moving average here at these highs here, I would even welcome a gap fill up here, but I really don't want it to go too much higher than that because I want to keep collecting cash. Just to review, when I sell calls against my long stock position, I collect cash. What do I do with that cash? I go buy more SLV. When I have enough SLV, what do I do then? I go sell more calls. What happens when I do that? I collect more cash. What do I do with that cash? I go buy more SLV. By then, I don't have enough to sell calls against, but I got free SLV. How about that? Free stock by doing the wheel. Now, I would not be doing this in just any stock. I got to calm down a little bit here because I don't want people second mortgaging their house to do the wheel.
No.
You only do that on stocks that you're willing to buy. Yesterday, Zero Hedge posted an article that I wrote, wound up on the front page in the evening hours. Not, I don't know if you could put that in the chat.
Yeah, we posted it. It's great. People are getting lots of hits on it.
Yeah, so go in there and read the Zero Hedge. Yeah, not just put it under StickyTrades in the chat. So go ahead and read that. You're going to get a good little lesson on how to trade the wheel. Folks, we did run out of content. We didn't
No.
run out of excitement and energy. We're just running out of time. So with that, I'm going to wish you a good rest of the afternoon. We have our rapid fire stock analysis webinar from 6 to 7, where I'll analyze 50 stocks in 60 minutes. I'm wearing my trading jacket today. If you didn't notice that already, this is my official trading jacket from Comex, the badge, the floor committee, everything. I'm in the mood to trade. I'm in the mood to show people how to trade. Come join us. We're not messing around, folks. You got the real deal here, and we're going to show you how to do it right. And stay away from the CNBC stock picks and some of the other advisors that are getting out there trying to get you long stocks that they want to get out of. Learn how to trade using spreads, learn how to hedge, and keep it in moderation, and just have a great time in this market. So with that, we're going to wrap it up. Thanks, Nod. Thanks, everyone. We'll talk to you next time. So long.